Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market overview. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, so we've done the intro. Now let's unmute. All right, so everyone who's here is live. Thank you for support. Thanks for hanging out with me. Let's get through this overview and see what's going on in the chart. So starting off with the dollar. So we're trading currently in this blue zone, which this blue zone here is a 5-year support zone. Okay, so this is where we pretty much, if we go back in time, you'll see 5 years ago this held as resistance, and then we finally broke through during 2021, 2022. Right around 2022, so fall of 2022, we broke through, and for a good chunk of time this was a major resistance zone here, pretty much from 2015 all the way until 2022, and now actually more than 5 years. So now we're trading within this general support zone, and we're also tapping into this monthly bullish fair value gap. This is the time to be looking for a long-term foundation being built on the dollar to potentially lead to higher levels. Okay, so the first level we're going to be looking at, like I've mentioned in the previous recaps, is going to be 103.65. Then once we get to there, look for potential slowdown. Potentially we'll get another spike up from there, going all the way up back towards this monthly bearish fair value gap right over here, which is around 105 to 106, depending on how fast or slow it moves up. We could see a pop up, let's say next week or early next month is super bullish for dollar. You see it just pop straight up. It can go all the way up to like 107, but most likely it'll take a gradual rise going from where we're at now to where we'll start consolidating, have another leg up, another consolidation, and then finally coming towards this downtrend line. So that'll be around 105 to 104.8. And then once we get towards this downtrend line, look for a slowdown, and then we'll have to wait and see, are we going to see a higher low structure build? And if that does happen, then the probabilities increase dramatically for the daily downtrend line to break bullish. But we're not there yet. First step, look for 103.65 in the short term, and then potentially more upside if we get bullish consolidation around this zone. Okay, next is the Dow, S&P, and NASDAQ. So let's see how they kind of finished off the week and what we can expect for next week. So overall, it's been performing overall as expected, right? It didn't actually tap heavily into this bearish fair value gap. It just wicked just under it a couple times, but couldn't actually tap into there, and it started slowing down as the dollar was showing signs of strength and also building out support at that major zone. So it's slowing down here makes a lot of sense. I do think this is likely going to lead to more downside because the dollar is likely going to hold its zone at worst, and then at best start building up to go up towards that 103.65. In that scenario, look for the Dow to break down at least into these fair value gaps here and grab the liquidity here. But it's more likely that if we do have that extension into the dollar going into next month and then potentially into the summer, then we will potentially see another leg down for the Dow going back towards 32,000 and sub 32,000. But again, just like with dollar, we're going per level. The first zone we got to look at is over here. So look for a sell down back to 33,000 and then potentially back down to 32,500. Okay, so I'm looking for downside on the Dow currently. If we were to see some upside, if the dollar were to weaken out, let's say next week, and then we'll look for a test into this bearish fair value gap zone back towards 34,000, 34,500, and then potentially taking these highs up here. But once you do that, look for a quick spike going towards 35,500 to 36,000, and then a pretty sizable retracement down. Okay, most likely, the most probable path is downside though currently. Next is S&P. Let's see what the S&P is doing. It's going to tell a similar story. Unlike the Dow, though, this one did tap into its bearish fair value gap, pretty much making this double top structure potentially. We'll see if it has the follow through, which I suspect it will. And then we'll look for the pull down into these fair value gaps. And once again, to these fair value gaps, I would be looking for consolidation. And I'm leaning as of now, because I do expect the dollar to have a continuous move up, for this to turn into a bearish consolidation that will then lead to another leg down coming back towards 3,900. Okay, so I am looking for downside, just like with the Dow. If we were to break up, so this is the least probable path, but if we were to break up, we're obviously going to be going after this pivot high, grabbing the liquidity there, and coming into this fair value gap zone right here, this imbalance right here. So essentially back to 4380 to 4400. Okay, that would be the next level we'd want to watch out for the S&P. Next is NASDAQ. So NASDAQ, of the three, obviously has the biggest extension, which is to be expected. So tapping into this bearish fair value gap and now kind of ping-ponging between the fair value gap and my green zone, okay? But it's still very likely to finally break further into this green zone, take out the lows here, take out the low here, and then start attacking this zone right here, this fair value gap zone here. So you have a couple fair value gaps all through here, and look for that level to be attacked, and potentially a higher low will build there. But just like with the S&P, if we get that next leg up, or at least that bullish structure being built on the dollar, you'll start seeing a bearish structure being built on the NASDAQ, just like the S&P, which will then lead to another leg down, probably coming down towards this fair value gap zone here, and potentially even this red line zone here, okay? So grabbing the lows here under this pivot right here, and then potentially attacking this general zone and maybe even threatening this low here. All right, so again, I am looking for downside on everything that's not dollar and oil, and then essentially looking for potential continuation to the downside if the dollar is going to show us the continuation to the upside. Next is oil. So let's take a quick look at oil. So oil actually had a nice little sell-off into the week, but that's to be expected after such a gap up here. So the gap up here that occurred was from Saudi Arabia cutting supply, which was unexpected, and it created this nice little gap. And what did we have? We had a take out of these highs here, this pivot high here, okay? We even took out this pivot high here, and then we pulled back into this gap zone. And if we hold it, which it looks like we potentially may, what are we doing? We've changed character. So we're making a higher low after making a lower low, and after making a higher high. Okay, so we're potentially going to make a new move up back towards the 90s. All right, now doesn't mean we're going to stop here. We could actually break lower here and then hold this fair value gap and then make the move up. As long as we don't take this low out on oil, the potential character change is commencing. Okay, hasn't been confirmed, but it is commencing. We have one of the two things that needs to happen, which is making a higher high after we've been making lower highs. Okay, so I'm looking for dollar to break up, and I do think the dollar will break up if the dollar is going to show. I do think oil is going to break up if the dollar is going to continue to break up and show strength, because they are tied hand in hand still. So watch for oil to show strength if the dollar is going to show strength. Okay, it's not 1-to-1, but you will see that they do rhyme. That the dollar may strengthen very hard, and that may cause oil to kind of go down or go sideways, but give it enough time, you'll see oil catch up to the dollar's behavior. So if dollar goes up, watch for oil to spike up back towards the 85s, and I do essentially see it getting back towards the 90s. And then we're also going into the seasonality aspect of oil, whereas we're going into summertime, oil prices tend to go up. So watch for the seasonality and dollar strength to lead towards the to oil strength. If we should break down, first level is going to be this fair value gap here. If we start losing this level, then hey, then we do start to look like we're going to break back down towards 60. So taking out 62 and breaking down towards 60. The problem with that is this blue zone, just like with the dollar, is a major support zone. Major, years in the past. So it's very unlikely to break this immediately. Will likely lead to a large consolidation in here that could then lead to a breakdown. But we're talking weeks to months of trading in here. In my opinion, it's more probable we do see that push up going back towards 85 because we're going into the summers. Okay, next is gold and silver. So, oh man, gold and silver. I mean, it's been super bullish on gold. I still am bullish on gold, like I've said repeatedly, but it is very likely going to have a pretty significant retracement because the dollar is showing strength, and if the dollar has a continuous strength, you're likely going to see gold retrace back. And it is playing up here, creating, in my opinion, a topping structure. Okay, so you may see a breakdown here again, and they may pull up from there and start building out consolidation, that will then lead down to more downside. Okay, so even though we're breaking down here, I would still have a bias that's bullish when you're looking at the long term, but short to mid term, we are likely going to see some downside coming back to at least 1930, and then potentially into the 1900s, 1890 zone. And then I do think that we will see more downside on gold to come back down all the way back down towards 1865 to 1800. And once you get towards there, I would look for a pretty sizable bounce up, and then we'll have to see how the price action looks, if it's going to lead to new all-time highs, or if it's just going to lead to another consolidation that will then lead to lower levels. As long as these lows down here don't get taken out, we're looking on the macro at a very bullish structure. Okay, very, very bullish. But short term to mid term, I am thinking the gold run is over, unless there's some geopolitical and other external issues that come about, like more banks fail, or the war picks up in China and Taiwan, Russia, Ukraine, etc. But just looking at it in a vacuum in a chart, it looks like the move to the upside is done for now. But I would look at this as being a potential opportunity to buy in off the pullback, because if you look at this going out into years, I think gold will be trading much higher than where it is. Okay, next is silver. Silver, let's see how silver's doing. So silver's extension was absolutely incredible. I mean, gold had a much more powerful extension up percentage wise, but this last leg up on silver was so powerful. I mean, just non-stop, almost completely 90 degrees, and then finally filled out all the liquidity here. So all these red zones here are bearish fair value gaps, all that got filled, and now, just like with gold, is showing signs of finally slowing down. We're likely going to pull back, fill out some of the bullish fair value gaps that were built here, some of the liquidity that's sitting there, create a consolidation, and then lead towards lower levels. And I do think we're going to see silver back at the 22s, 21s, and potentially even back to 20.5. Okay, so it's very similar to gold, very similar, but I'm still bullish on it overall, just like I am with gold. All right, now let's head over to Bitcoin and see what Bitcoin is up to. Bitcoin has been a very, very interesting asset to watch. As you know, if you are in the Lemon Garden and you're in the Discord, you probably are aware that we are short. So we are doing pretty well in the short now, considering what's been going on with Bitcoin. But Bitcoin, just like with gold and silver, very extended with very little consolidation as it's moved up. And this consolidation here, in my opinion, was not very decisive, or at least convincing of bullishness. So I was very skeptical. And so far, my skepticism has paid pretty well. We are watching Bitcoin attacking the lows of this consolidation. Now, with what I'm seeing here, it is very likely going to lead towards another consolidation. But the consolidation, if this does not just dump here, is likely going to be bearish, and you will see that move back down towards 25,000 to 24,000. Okay, so this zone here is what's most likely the path going forward for Bitcoin. So this is the destination that we should expect if we're looking at the probabilities. Now, of course, it's all probabilities, doesn't mean it's going to always happen. If we're wrong and it starts to break up again, then you just have to pretty much look up, going towards the monthly bearish fair value gap up here. So anywhere from 32,000 all the way up to about 38,000. And if you've been watching my recaps for quite some time, so going back a couple months, really back to the beginning of this year, or near the end of last year, I had said, as we were long around 18,300, 18,400, that my key zone of transitioning from being long to short would be between 28,000 and 38,000, so that 10K zone. Now that's essentially what we've done, right? We have let go of the longs we were in, we're flipping short, and it's because this zone here is going to be the most attractive for smart money that accumulated longs all throughout over here, okay? And we're in that boat. So we may still see another spike up, because that smart money is going to want to try and let go of the longs they haven't closed yet, or try and open up the most optimal shorts they can get. However, that has begun. So it doesn't mean it's going to have to go up there. They may have already done it for what they can do, okay? they just may not have been enough fuel to break it up this high. And I'm not surprised, considering if you look at the if you look at the consolidations, or what you, if you could call them consolidations, that would have led to this upside. It was very little. You had this very small consolidation that led to minor upside, then a failure, and then you had this V bottom spike that did not have any consolidation, that tried to lead towards upside, and then you even had this, in my opinion, really wonky bullish, or an attempt at a bullish consolidation, this like rising pennant structure, to try and lead to upside, which didn't have any follow through. And that's because, unfortunately, the actors in this market refuse to let Bitcoin create a base here and really try and solidify the top of this consolidation over here as support. And it really killed any longevity argument, in my opinion, for upside, in Bitcoin getting towards 38, 34, 32. So far it's looking like that's the case, and we're likely going to see 24, 25 first. And now we're going to, if you're bullish, you want to see this hold the tops of this consolidation, which is also the tops of this consolidation, create a base here over a couple of weeks, maybe a month or two, and then lead towards more upside. Now, if we start losing 25, 24, then we're actually starting to threaten the 20,000s again. And this is why I was very, very annoyed that, they just wasn't consolidation down here. Now, wasn't something that really affected the trading, as we did get to go long or right over here, and the long played out almost immediately. We closed around like 27.6 or something, so we only had to hold for like about a day before we saw major upside. And that was great. But if you want some like longevity in the move, it was very frustrating to see, at least on my part, because I was looking for Bitcoin to get towards the 38s. Okay, I did want to see that happen. I would have liked to have seen Bitcoin trade there for people who were long, so they can take their money, and also to build out really optimal shorts. But we didn't get that because, again, money was pushing this prematurely, in my opinion, before you could get a base. And now there's going to be a punishment, and it looks like the punishment is commencing. If this turns out, yesterday's candle turns out to be a bearish inside bar, then this candle or the very next daily candle is going to lead to a pretty sizable drop. Okay, really sizable. We're talking anywhere from a 5 to 10% candle to the downside. So that could be really dramatic and really painful for a lot of people. Now, it'll be good for us, as we are short. The majority of our positions are short, and the long positions we do have are early on that we're going to be building. But it's going to be painful for the markets, and I don't want to see that. But that is potentially what's happening. And if we come in too hard and we don't hold these levels correctly, then this here becomes a major target for liquidity. And I do not want to see Bitcoin trading back under 20,000 or near 20,000 on the monthly. Okay, so if we go to the monthly chart real quick, we're going to wrap it up here, but I want to note this. If we go to the monthly chart real quick, notice what we're looking at here. Okay, we have 7 days, or virtually 8 days. Okay, if we have a bearish monthly candle here that leads all the way back to the 20,000s, you're engulfing this bullish candle we had last month. All right, that's not what we want to see. And if it happens next month and we close this monthly candle like this, and next monthly candle is a bearish engulfing, that's even worse. So this is why having consolidation over here, in my opinion, was so important, because you created a floor for upside. Now, if this ends up being a bear doji and the next month sells down to the 20s, what are we looking at? Well, we're looking at this. We're looking at this. And that's not what you want to see. Okay, now it doesn't mean it's completely bearish. It just means that now the retracement is going to lead to a much larger retracement down that may lead to a much larger sideways consolidation going forward. Okay, so it's not what you want to see. It's not optimal, but we have to wait and see how this plays out. This next week is going to be very, very important. It's going to be very, very important. And if the dollar opens up too strong, it's going to all but guarantee we have a very bearish monthly candle close this month. All right, so we'll keep our eye on it. That's why I always say, we're going to end the video with this. Always be patient, be vigilant, and be nimble. I love you guys. Take care.